Okay, we're live for another show with Harumi. Harumi, you've been on before, but welcome back to the show.
Thank you. Thank you very much, Nick. It's always great to be here and talking to you about cryptocurrency, DeFi, generally speaking, and also be able to provide a financial literacy. So
Yeah,
thank you for inviting me back.
yeah. That was the first video we did, was kind of financial literacy 101. And actually, after we kind of hung up on that one, I had been saying, "Oh, I'm an idiot. Like I don't know about any of this stuff." And you're like, "No, you know more than you think." Like a lot of people is what was it like? Don't know how to open a bank account, and I think of that as like, wow, there is a level of literacy I just totally take for granted. Is that I can walk in and open up a bank account, and I know the difference between checking and savings, but not everybody, knows that.
Absolutely. So, I think we are living in a very fortunate, I think, environment where we had that kind of education, access to the financial institutions, things like that, as you said, taking it for granted. But you step out of this kind of a very small circle of what's like 7+ billion people, planet, and there's so many people who never had a chance to actually be even aware
Yeah.
of things like that. So yeah, we are very fortunate, and I would like to make sure that we all can get there at some point in our
Yeah.
lifetime.
And a lot of times just knowing about something is enough to start you on that journey. Like it doesn't get you to the end of the journey, but if you don't even know that there's a door there, it's pretty hard to go through the doorway.
Absolutely, absolutely.
So we're doing this interview on May 11th, which is special for two reasons. One is that today light hotspots are supposed to be firing up for helium. So that's a pretty big deal. We'll see how that goes. I'm sure it's going to end up being great. Although I'm expecting a little turbulence in the short term. And then the second thing that's really important about today, and more kind of apropos to this conversation, is that the markets are in turmoil. It's pretty crazy right now. Ethereum's gone down, Bitcoin's got down, HNT is under $10. Um, let's dive into this whole kind of DeFi idea. So let's start off with what DeFi is and how long you've been a part of it, or paying attention to it.
Absolutely. So DeFi, I think when originally blockchain became somewhat everyday language, DeFi really meant much broader.
Mhm.
The word DeFi had much broader definition, in my opinion. It stood for decentralized finance, and it really stood for financial services, or kind of like the development that we can make using the technology that allows us to be in the decentralized environment. So
Yep.
any pretty much financial services that we may have been able to provide via the technologies like blockchain, in at the very beginning it was all DeFi.
Yep.
And then I think we began to kind of branch into a couple of different directions, where even sort of in that original sense of DeFi sense, some of the companies were a little bit more centralized, meaning there's a experienced team of people managing what goes on in on their project, and then there are some projects that are completely kind of somebody builds the smart contract, and then like sort of almost like let go of the control,
Yeah.
not completely, because there's still a management people who are responsible for that protocol.
Yep.
But in a way, kind of everything gets voted by everything gets voted in. The central management doesn't necessarily make a decision on behalf of the project and things like that, and that became what we call DeFi today. So what is happening in the sort of like blockchain financial services, generally speaking, and it's not just actually cryptocurrency, but pretty much in the world, the
Mhm.
market has gone down in the last few days. And some of the asset classes got it a little bit more volatile than some others. And cryptocurrency definitely was hard hit. So I think that's where, in a very big picture, as the sort of intro to what we're going to be talking about today, that's what you're seeing today. Yeah, as part of the whole market going down, cryptocurrency did what it usually does, by the way. It just took a very deep dive, or
Yeah.
nosedive, into the sort of downside of this market.
Yeah. And my feeling on that, and I'd love to get your take on it as a more experienced participant, is that this is just normal crypto stuff. Like when people say, "Oh, crypto's volatile," they'll say that when it's up and like they're feeling like they're on top of the world. But it's important to remember that we've got these down spikes too. And, this is certainly not financial advice from me, but I think if you just can sit on your crypto right now and not do anything, that's probably the best thing to do. And maybe I put that another way, like that's more or less what I'm doing with my crypto holdings, is finding something else to do, and I'll just wait till the market comes back up. But I'd love to hear kind of your take on, what you think should happen, or a person, like the perspective a person should have on this.
Absolutely, Nick. And it's a great question. Thank you for bringing that up. I mean, as you and I are not the financial advisors, we need to always make sure that, it's said sometime during a session like this.
Yeah.
This is by far definitely not an advice of any kind. But the way I see it is, if you look at, if you have any kind of access to any sort of historical price movement. I mean, every instrument has a tendency to go up and down, up and down. And then, yes, like I said, and also you said, Nick, some of the assets are a little bit more volatile than some others, and cryptocurrency has a little bit more of that volatile, going up, going down.
Yeah.
So just because the market goes up and then you feel good putting your entire worth into one asset class, or just because the market started to go down, in the panic, without having a reason for that, getting rid of everything that you have, it may not be necessarily the best thing for your portfolio holding.
Yeah.
I completely understand. From time to time, people may need money, or some of the down market might stay there a little bit longer hold than you like, or you think that at some point cashing it out, dollarizing it, and then getting back into the market later on. All these things make sense.
Yeah.
All I think we are saying here is that just because the market is moving one way in a very fast moving market, that shouldn't be the sole determinant of what you do with your portfolio holding.
Sure. Yeah. No, I'm either holding or buying. That's what I'm doing right now. It's just like, God, we always kind of wish we had more money sitting on the sidelines when it goes down.
Don't we all?
Yeah, but you got to go what you got, and that's it. And that's the tough piece to it.
Yeah.
So let me ask you, I looked at this DeFi stuff and I got really excited and then really jaded on the idea that you can stake and earn any kind of insane return. Just probably like a lot of folks, I got into, what was it? It was an Avalanche thing, Time Wonderland. And I was like, oh my God, 70,000% returns. I'm crushing. I'm going to, when am I getting my brand new Toyota truck? And it turned out that wasn't the fact. So my kind of position now is anything where someone's like, oh, this pays you to park money there. I'm like, I'm not touching that. Is that a reasonable thing? Or do you think there are projects out there that seems like, oh, yeah, go ahead and park your money there, or here's what to look for?
Right. Okay. So we are talking specifically about staking. So let's just talk about staking a little bit. And then staking means, as Nick was kind of saying, it basically means, there are a lot of different sort of technicalities behind that, and we can go more into details. But in a nutshell, it means that you do get your coins locked up for certain period of time on some blockchain technology, where you're staking your coin, or you're becoming a part of that. There's basically consensus. Sort of like decision-making process, basically. And you get certain returns on your coins. So the question is, does that make sense to have your coins in that kind of what we call node, or just kind of keep it in your pocket or wallet for that matter?
Yeah.
And Nick, we can definitely keep adding more questions to this. But my take is, yes, staking does give you a certain sort of fixed return.
Yep.
Right. So, which may or may not be a good thing. It's always, we talked about, for those of you who listened to our last conversation, we talked about diversification of portfolio. This is exactly the same. If you do think that kind of fixed return for a certain period of time actually does add value, because you don't have anything like a fixed income in your portfolio, then I think it might make sense to consider that. What you don't want to do probably is to just put all of your assets once again into one staking pool, because what if for example, the coin that you have really starts having a great run, And maybe like, there is a point where you might want to cash out a little bit of your portfolio so that you can bring it back. You can reinvest it into something else. Maybe you can use it to pay your invoice, tax, whatever it is that you might have. But you have it locked up for a certain period of time, and then you don't have that kind of luxury. So you always want to kind of think, in advance. Okay, so I'm going to get this locked up for 6 months or 2 years, depending on which technology, what coin you have and which technology you're putting that into. Can I afford putting this much into that kind of environment? And in return, I get a fixed income. So that's something that you need to be constantly asking yourself.
Totally. And I mean, I look at this like, okay, let's say you've got enough for, I think for Ethereum, you have to run, what is it, a half a node, which is 16 ETH, which right now is, I don't know, let's just make the math super easy and say $3,000. It's right around $45,000, right? Somewhere between $40,000 and $50,000. That's a lot of money for most people. And to lock that up now, if I'm understanding the ETH kind of staking piece right, is basically you put that chunk in and then you won't be able to touch it until we go to, what is it, ETH 2.0? Like I'm trying to figure this stuff out as fast as I can.
No, absolutely.
And see, like, that seems like and then the return on that may or may not be good. Like it just seems pretty crazy that if I had that amount of money, like, man, is that a sensible thing to do? Or is there a better place to put that? Or another way to think about kind of diversifying or putting it somewhere else?
Yeah, absolutely. So I mean, generally, I think as the sort of like, when you're looking at the portfolio, let's say for the sake of argument, like you don't have anything else, and you might, everything is here in the crypto at the moment. Then you're talking about, okay, like if you're younger, if you're older, and then you're talking about just holding on to the cryptocurrency without doing anything with it, and then you might do like a sort of cash out from time. So like you go buy. Hold for a while, sell, cash out, and then you reinvest. That would be your very active part of the portfolio. And then what you get indeed out of staking is something that is equivalent, not quite the same, because there's no principal, almost guaranteed, like, if with the proper fixed income out there, like a bond, if you put your money into a bond right now and then you hold it until maturity, most of the people cash out before then. So the math doesn't quite work out that way. But let's say you hold it until the maturity, then you have the principal guaranteed, shouldn't say guarantee, but close to guarantee, as long as the issuer doesn't go out of business. And then, the payout is par value. And then you keep getting 5% or whatever the bond, the coupon that you have on the bond, right? Which is a little different in the cryptocurrency, because your principal also keeps moving, and there's no such thing as maturity where you're going to get the same money back or like a par amount back.
Yeah. Right? Let me make sure I understand that, because I mean, this is where my financial literacy is gone. So I'm thinking like the city of San Diego, where I live, issues a bond because they want to build a new bridge. And that bond is, they say like, hey, you can buy whatever, a share for $100, and in 20 years, we'll give you $120 back. Is it something like that? So you kind of know what you're putting in, know what you're getting out, or am I like my ignorance is on full display?
No. Bond is exactly like that. So usually, like, if it's 120, then 120. But for the ease of communication here, usually par is like 100. So like 100, right? Okay. So let's say like today the bond, because the interest rate also moves, you don't always come in putting exactly 100 into one, like 100 the par value, the 100 value of the bond. It might be actually under par. It might be over par. So if you actually if you start calculating start doing the bond math and then kind of start calculating yield to maturity, that is slightly different. But let's say like today you're putting 100 into $100 bond, and like the coupon pays 5% per year. Then that means that until the maturity time comes, you hold that bond until maturity. That means you're going to get back that 100 that you put in, basically, right? Because you're redeeming your bond at the full maturity par value, plus that 5% that you collect every year.
Okay, so you're making like an investment. Like in this case, if San Diego wants to build a bridge and they want to raise whatever $100 million, and they sell, like, are they called bond shares? Or are they called bonds?
The bond, yeah,
Yep. So
you get your, yeah, exactly.
They sell bonds for $100, and they've got to sell if they want to raise 100 million, they got to sell a million of these bonds. And they sell one to me, and I buy it for $100, and it's a 5% return. You're saying that percentage can go up and down, but as long as I hold that bond, I get that percentage every year. So the first year I get $5, and then it's not a compounding thing. You just get the same amount every year. Okay.
The concept like compound more comes in because you receive 5% this year, you receive 5% next year, you receive 5% the year after, and you might be reinvesting that 5% yourself, right? So then you start having a compound effect of, because like, this year is 5%, next year, if the interest rate that you can earn on whatever the 5%, like $5 is, let's say 10%, then you are going to be getting 50 cents on the dollar, right? 50 cents on the dollar, right? So yeah, I mean, that's like, that's the, oh no, sorry. What am I talking about?
5 cents.
I said 10% on the dollar. So it's 10 cents on the dollar, excuse me. So yeah, I mean, that's like, and then that keeps compounding as long as the interest, like, so you're reinvesting.
Yeah.
And the percentage, the coupon itself, unless it's a floater, it doesn't go up and down. 5% is fixed. That is like on the bond. So you get 5% every year. What I was talking about, the yield to maturity, and then, we can talk about bond math at some other time if somebody wants to get really technical.
Yeah.
But depending on when you come in, because bond usually like, goes for 5-year, 10-year, 20-year, 100-year, like sort of maturity term, right? So depending on when you come in, unless you, it may not be always, you may not always put in the par amount to own a bond.
Okay.
It might be like, under par, you might get it at $90, or you might get it at $105 for the $105 for 100 par value bond. So that, because you're putting less money than par or more money than par to buy that bond, right? I mean, your ultimate return might not be exactly 5% plus the compound effect that you get on the coupon, because you might be getting, you are going to get only par at the redemption time. So, if you get it under par, then you get on top of the coupon, you're effectively making $10 more on that redemption value, right? So, yeah, I mean, I know the calculating bond is, it can be very tricky. And like it does require a little bit more math than say like you are buying, selling the shares, where there's no such thing as par value. So it goes up and down, and what you're going to get is the difference between how much you put in the money and then how much you're going to sell it at.
Okay, I mean it certainly makes more sense to me than it did 10 minutes ago. But I can see there's a lot to learn. So how is that? I guess what are the openings that that crypto is kind of creating that allow us to do something different than just a straight stock or a bond? Like where are the most, where do we go from here?
So if you hold it buy and hold style, buy, hold and sell style, that is pretty similar to what you might do with an equity, right? I mean, you come in, buy a share of Apple at whatever the price, and it goes to wherever it goes. It might go up, it might go down. And when you sell it, that difference becomes the money that you claim at the end of the year in order for you to claim the tax. So if you do that kind of buy, hold, and then sell sort of style with Bitcoin or Ethereum or Helium for that matter, I mean, that is somewhat similar to that, except that because so with equity, something that you're always thinking about is what is the company worth, right? So if you think that the company is only worth, let's say $100 million, probably you wouldn't be paying the price where when you multiply the number of shares outstanding by that price becomes, let's say, $1 trillion worth, just because it's not, I mean, again, there are a lot of things like valuation and sort of future growth expectations and stuff like that, so that it doesn't exactly work, the same. Plus, of course, there's a market expectation and sort of like people just come in and buy whenever they buy. So we go off the mathematics. But generally, that company value becomes somewhat an anchor to how much you might be paying for the company share. Now, for the cryptocurrency, there's the concept of valuation for each project that issues cryptocurrency.
Yep.
But it's not as hard sort of anchor point.
Yeah, totally. It's not as connected, for sure.
Exactly. That's why you start seeing this really volatile ups and downs when the market starts moving, because there's nothing that you look back and say, this project is only worth X valuation. Therefore, this can only go up so much or this can only go down so much.
Right. I mean, HNT today, I just saw it before we got on, is like 9. I think it dropped down to 985 was the lowest I've seen. And 6 months ago, we're in what, month 5? So that's month 12 or less. Maybe 7 months ago, November, it was like at $60. So it's gone from 60 down to 9. And this time last year, it was probably around 20. So pretty crazy ups and downs there. But that is, if I'm understanding what you're saying correctly, that's because like there's this kind of almost decoupling between the value of what folks think of the ecosystem and then how strongly HNT is like stuck in the cryptocurrency overall market. Like it's just following Ethereum and Bitcoin down, even though the value is the same as it was, 4 weeks ago. If you could calculate the value.
I think yes. I think you're putting it in the sort of like very simplified language that I think we like.
That's all I can understand.
Yeah. We want to use today. So yes, thank you for simplifying that. Yes, I think that's exactly what I'm saying. And because of that, it's very difficult even for somebody like me who's been in the cryptocurrency for a while to really sort of decide when to jump in or when to sell. One thing that I know from my experience is that whenever it took a sort of nosedive the way it did in the last 2 days, yes, there may have been sort of there may have been some crypto winter in the past, so you can never say, oh, this is going to come right back. And definitely it's not the kind of advice that I'm giving, that just wait for the market to recover and then think about it. But it tends to bounce back. So it's like I said at the beginning, probably just because the market is moving fast right at this moment, you shouldn't be making a decision of putting all your worth into one cryptocurrency or getting out of every position that you may own.
Right. Yeah. I mean, the big question that I've got, I was talking to, I've got this one buddy, I think of him as like my Bitcoin whale buddy, and he's way into it. And I was asking him like, dude, what should I do? Should I buy here? Should I wait for there? And he just sends me this video that is the buy the dip video, which is the two robots talking to each other, telling each other to buy the dip. And I think about that, like that makes a lot of sense, but how do I know when the dip is in? And the conclusion I've come to is like, nobody knows when you're at the lowest point. So you just got to make kind of your best guess and then set your buys and then go do something else.
Yeah, effectively, even the professional investors kind of do the same. We don't know, we study chart, and we sort of historically, what the market may have done. The sort of we start studying everything else, and we have a feeling for this may be getting close to the bottom, or as we go up further, we probably will see correction. Kind of, we do the research work. We put together with the experience and a little bit of a gut feel, even sometimes, because the cryptocurrency has gone into many uncharted territories in the last few years, right? I mean, it just kept going up. Occasionally it might correct, but it just kept going up and up overall. So it's very difficult. It starts getting very difficult, even for the professional investors who may have done different variety of an investment for years and years.
It's good to know that nobody knows what's going on.
Oh yeah, no, absolutely. But generally buying the dip, if you do think that this kind of an ups and downs will continue happening, then at some point when there is a very rapid sort of a down market that you experience, might make sense. If you have a little, a couple extra dollars sitting in your wallet somewhere, you might put that into market to see what happens. At the end of the day, you can only learn by, trying, right?
By doing it.
Definitely don't do all of your worth into into one market or one asset, but definitely try to start proving your theory.
Yeah. Create a
what I
hypothesis and then see if that works. And I don't know how much value it has to the watcher, the listener, but I know my own experiences earlier this year, 2022. We saw a market crash, and as it was going down, I'm like, I'm the smartest person in the world. Like, I'm buying the dip. There's blood in the streets. I'm getting my blood mop out, and I took everything that I had and I put it into whatever it was. Maybe I don't think it was HNT. It was like 2 or 3 tokens, and then it went down another 50%. I was like, oh, I am an idiot. I have no idea what I'm doing. And that's when I started talking to my Bitcoin whale buddy a lot more. And this time, like, the learning that I have that I'm kind of passing on, this is what I've learned is just, I'm going to start waiting longer and waiting until I see what I think is it coming back up and not buying as it's going down. Now, I could be totally wrong in that. That could be the worst strategy. But what I found is just waiting the past couple of days, I've been kind of ready to hit the buy button. And I'm like, I'm going to go for a walk with my dogs. And I come back and it's even lower. It's like, oh, thank God I waited. So, this is more like kind of stock trading stuff and less financial literacy, but just something that I've picked up is probably way.
Yeah, no, absolutely. A lot of people do some kind of like triangle strategy where as it starts going down, you buy a little bit and then you buy a little bit more and then you buy a little bit more.
Yeah.
So yeah, you're definitely kind of like, I think learning on the fire.
Yeah, for sure. So let's go back. We've got this this kind of set of topics. I don't want to get too far into trading, even though it's like the most exciting thing for me right now. Is you'd had a question, what is the blockchain? Or how does the blockchain work? A, does that question still make sense to you? And B, do you want to go in and talking about that? Because I think, the only visualization I have is a blockchain is like a bunch of computers all submitting solved equations to each other. And then this thing grows and somehow that's secure. But that's kind of the full extent of my understanding.
Okay. All right. So no, that's actually a really good question. And when I just began to kind of like, look into Bitcoin as a potential alternative, smaller or alternative investment. So for those of you who don't know me, I'm a CFA charter holder. And, I don't necessarily have done the investment kind of work all my life, but obviously getting involved in financial services all my life pretty much.
Yep.
And I got interested in potentially investing a little bit of portfolio into Bitcoin fairly early on.
Yep.
And so I looked into the technology and then I looked into Bitcoin at that time. And one of the things that I didn't get is, so everybody just casually talks about blockchain. Well, everybody meaning like a sort of handful of people around me, right?
Yeah.
But I didn't quite understand how the technology works. So when people talked about decentralized something, I just didn't quite understand what decentralized, why is it decentralized other than the fact that there's this technology called blockchain that allows us move out of some middlemen. Conceptually, I understood that, but I still didn't understand why it was the case. So I think, understanding how the blockchain or the distributed ledger technology actually works, I think it's important. And then I think a lot of things can start from there. So the best explanation that I got when I was just starting is, so if you think about how our computers traditionally got all the data or connectivity worked, is there's a big sort of black room somewhere in Singapore, somewhere in a science park, right? With an old dark room and then lots of machines sort of flashing all the time. And all our computers were talking to the central data center. What distributed technology allowed us to do is to take out that whole expensive setup and for my computer to talk to your computer, which talks to somebody else's computer. And then we began to kind of create almost like a cobweb kind of infrastructure. And, nowadays, probably a lot more people actually know that because it's been a few years since when the people kind of began to talk about blockchain. But when I was just starting, even mentally drawing that picture, and I myself created a presentation describing this is what it used to look like and this is what it looks like today with the decentralized ledger technology. It really allowed me understand why we talk about node and why we talk about decentralized technology and how it works. So I think that is a very valid question for all of us to at least sort of like, we don't have to necessarily understand fully why it works or how it works,
Right.
but what it looks like to have the decentralized ledger technology.
Conceptually.
So that,
Yeah.
when we talk about taking out the middleman or this or that, it's visualizable.
Yeah. Now, were there any implications once you understood that for you as a kind of financial professional where you thought, oh, this opens up X, Y, and Z, and that's what I'm going to go explore?
Understanding the technology didn't necessarily make me think that, this is going to make, this is going to make how I invest my money different. But rather, what it made, I think a lot of us think, is where all the TradFi, traditional finance works, is we really we really have to trust a very small number of people who make a decision on behalf of the technology. And then also all our transactions go through that very small centralized location. So we are in a constant sort of, we are in this place where once, we might have to wire some money, or once we gave money to certain institution, we just have to trust that they're going to be here tomorrow.
Right.
And if we want to wire the money, this Fed wire is always going to be functioning tomorrow, right? Whereas using the technology makes it definitely more peer-to-peer transactions. That, I think, is what really kind of got a lot of people excited, that we don't have to necessarily rely on small people or one technology service to make sure that everything works. I think that's what, that was more of a, I think, a decision-making factor for many people to start looking at this technology as an alternative way of providing financial services.
Yeah. Oh, it doesn't seem to me to make any difference to like me as I guess you call me a retail, like a small end user, right? If I've got $1,000 or $10,000 or whatever, like some small amount, not millions or billions of dollars, it doesn't matter to me. And correct me if I'm wrong, like whether I take that money and put it in my bank account and then wire it to a crypto exchange, and then that exchange does whatever they're going to, I put in my trades there, or if I put it in my MetaMask wallet and I do my stuff, do my trades on MetaMask or some other way. Like, to me, there's always still fees. There's still like a cost and expense, and there's probably a nicer way to say that, but there's still the ass pain of moving the money around. Like when I go to my bank and I've got to do a wire, I've got to call them in, and this particular bank has to call me back. Like I can't call them. They have to call me in order to confirm a wire. But the same kind of thing happens on MetaMask. Maybe it's a little bit easier where I, put in a little password and it allows something to move from one thing to somewhere else. And my sense of it is that for me as a kind of lucky resident of the first world, it doesn't make much difference, but maybe this makes an enormous difference for someone who is not in my position. Is that right? Or is it not really a big deal?
I think you're absolutely right. And then, to be honest, from the complete sort of retail person's point of view right now, I think the biggest change that the biggest sort of difference the blockchain technology made for me as an individual person, rather than some people who are like managing all these transactions from the sort of company or project side point of view, is that I can wire money 24/7. Right? I don't have to, if this is a Friday, 5:00, and I actually needed to I forgot to send this money to so-and-so, I don't have to wait until Monday, 9:00 to send that money out.
That's a good point. Yeah. Like once it's in the system, it's really fluid to move it around. You can do it whenever you want. I hadn't even thought of that as a benefit, but that shows just how much I don't know.
No. But, those are the things. So sometimes having been on this side of the sort of fence for a while, sometimes I forget, and then I talk to my friend's family or something, and then I'm like, I need to send you money because I want XYZ.
Yep.
Oh, but sorry, we're talking on Saturday. I can't send this to you right now. I'm going to have to wait until Monday. So is it okay if I'm going to wait until then? That is something that I tend to forget because I'm so used to being on this side of the fence, right? So I think it's kind of interesting how that kind of dynamics works. And, to go back to your original question, to be honest, I think the blockchain technology is probably works even more powerful in some other areas. I mean, the financial institutions, because there's so much money,
Sure.
sort of kept in this financial services. I mean, this is one of the things that is getting a lot of people's attention right now. But
Yeah.
for me, where the something like blockchain really, really shows its power is when it's utilized as a part of like a supply chain / value chain, where you can show that there's nobody can tamper with that sort of trace of flow of how things are going.
Yep.
And that's where I do think that, something like blockchain shows its real true color, far more so than the financial services, financial institutions. But, in the finance, what makes a difference is that you can show immediate money and say, look, we have almost like $2 trillion coming into this. And without blockchain, this new technology, we may not have seen this kind of transactions and young people becoming more active in trying to manage their own wealth. And this is like, if this is the side benefit, then that's actually a very happy side benefit of providing this technology and cryptocurrency.
I guess it's interesting, and it, again, like I don't think, I'm pretty sure I've never opened up like any kind of money market account. I've walked by the Edward Jones shop, I don't know how many times, just like, I'm not going in there talking to that guy or talking to that girl. Like, that's just not me. And I think that I kind of accidentally ended up doing that through MetaMask or through kind of, blockchain in general. It's like, oh, well, I could invest in Ethereum. I don't need to ask anyone's permission. I don't need to, maybe that is a much bigger thing than I give it credit for. So that's pretty cool.
Yeah. And then I think one of the things, I don't know if it's, I don't know, 100%, I don't think there's like 100% good, 100% bad, or, sort of right or wrong here. Yep. But if you walk into any of these, the traditional financial institutions that you just mentioned, and you try to open any kind of account, whether you're talking about money market or, just regular account, the kind of paperwork that you have to go through, that's like, just by looking at it. And I'm like, I sometimes like look at my sort of like, update document that I need to fill in or something. I'm like, I'm not sure if I'm going to be able to fill all of this correctly. I need somebody's help.
That's crazy.
Yeah.
It's crazy. It's just how much you've got to do. I guess it's the stuff that you don't notice then that is the biggest difference. Like, you don't notice it because it's gone. There's not 30 pages of paperwork to fill out. Once you do your KYC on the exchange side, you're good. And for MetaMask, I started a MetaMask wallet, I don't know how many years ago, 7 or 8, something like whenever, a while ago. I don't remember filling out any paperwork for KYC. It was just like, hey, you will like load this app or whatever it is, and write down your million different fancy seed words, and then you're done. So that's pretty cool.
Yeah, absolutely. I do think that a DeFi side, the MetaMask side, is probably going to change a little bit, and then I'm sure eventually it's not going to be as sort of like free to grab as it is today, in my opinion. Right.
Yeah.
But
no, the government wants their piece for sure.
Yeah. But also, like, is it ever going to be like what the banks expect you to fill in, like 20 pages of paper? I don't think it's exactly going to go there. So between sort of decentralized finance and DeFi and banking, sort of traditional banking, I think there will be a happy medium where the blockchain side of the business would probably fall.
Right. Because the huge downside of going kind of totally decentralized is this, at least that I can see, is this idea of a rug pull, is that you put your money in, you don't know anything about the people who are doing it. You don't know if they're good actors, bad actors, whatever. I have just been kind of acting on blind, ignorant, and mostly misplaced faith.
Well, it's not that much different for even the institutions, because there's no such thing as like a proper onboarding of a DeFi protocol, right? If it's if it's an institution and an institution trying to start a business with each other, traditionally, what happened is they each they kind of onboard each other. They ask for some financials, they get to know each other. And then maybe they do a little bit of something before, and they check technology, this and that, before they start putting a little bit of money. But with DeFi, today, with the way things work, there's none of that. I mean,
No.
maybe, we can check the code. That's about only the thing that you can do.
Right. And that's only if you know how to speak that language. If you're a
Precisely.
normal kind of regular person like me, it's like, well, this looks cool. Let's see what happens.
Exactly. And then this has been around for, oh my gosh, all of 3 months. I think it's
Yeah.
trustworthy. We are going to jump in, right?
Yeah. But
Absolutely.
I mean, and I think anyone watching this, if I think of if my folks watching this, which they won't because they're not on YouTube, they'd be like, God, we raised an idiot. Like he is just slinging money around like crazy. But the flip side is that by slinging money around kind of early on, you can get super, super lucky. I think I told this last time is I was buying Ethereum when it was like $1.74. And people are like, what is that crazy thing? And I sold it at whatever it was, 14 or something. We put a new roof on the house and I thought I was like the biggest baller anyone had ever met because I made whatever it was enough to put a brand new roof on the house. And then you see it go to where it is now, it's dipping right now at 2,300. So you that is the reason I think that kind of, I don't know if I'd call it total greed, but just like this speculative potential, why so many of us are saying like, all right, all I'm going on is a gut feeling and that's enough. But it must shiver the timbers of the kind of normal financial market.
Yeah, I mean, we always, many of us often talk about how many, say, like, billionaire do you see on the traditional finance side? Those people who made a career in the traditional finance side, and then those who made a career, and this is much shorter history too, right, on the blockchain side, and then how many billionaire exists? I mean,
right.
that kind of like shows the lucky or sort of volatility that we already talked about. This reflects all of what we have covered so far. And, I mean, there's nothing wrong if you're one of those lucky ones and then grab it while you can. There's absolutely nothing wrong with that. Some people buy a lottery.
Yeah.
You just happen to be in the crypto early on and you grab the opportunity that you were able to grab back then. So, yeah, how to sort of like interact with that from here onwards, now that a little bit more people are in here and the kind of increase or kind of like sort of up market, it's not quite going the way it used to. Now what are we going to do? That's why I think this kind of session is becoming more important than ever.
Yeah, you've got a note on here about splitting validators. What was? Do you remember what that was about?
I can't remember what the context that we were talking about behind that was, but also like I think knowing what I know, it probably is that if you have so you get picked if you're part of the validator nodes. Mm-hmm. You get picked to vote into different, right? I mean, you're not always voting on every single issue. You get picked and then you vote. So if you have enough assets, or if you have a way of splitting your nodes somehow, maybe like partnering with somebody or becoming a part of another technology provider or something, the chance of you being able to vote on some of the important issues that will come randomly to your way increases. So probably that's what I think maybe I was talking about. So like, if there are 100 nodes for a project, right? Not all 100 nodes vote every single time.
Okay, so when you're saying vote, it's if we drag it back to the Helium ecosystem, which I'm certainly the most familiar with out of all of them, even if my understanding isn't total, is that you've got a validator. When you're saying vote, it's like the validator gets elected to the consensus.
Exactly.
Yeah. They're not voting on a specific topic like passing HIP 55. It's voting on like, are we all agreeing that these
That's right.
These actions have been submitted. Okay, cool. So on this, we may have been talking about, because I split a validator with a buddy of mine, and I think 2 or 3 Gristle Crüe calls ago, we had a couple tax guys on. We had Matt Sorensen on, and then we had Greg. I think he goes by Greg 5. It might be like Greg the crypto guy on Discord. And it was amazing to me, A, kind of how Wild West it was, and B, the tax implications of all the stuff that I did, just kind of throwing not shit at the wall, but just, you're like, I made this HNT and it was worth, $20 in HNT when I made it, and you make up whatever 100 HNT, all of a sudden you owe taxes on that amount, even if you never took it out as fiat. And I know that myself and a bunch of other people were hoping that you didn't get taxed on it until you took it out of fiat. So there's all these like financial implications of ignorance in this space, and part of it is ignorance that you don't know, and part of it is ignorance that the market isn't really sure of what is happening.
Absolutely. I think it's definitely, I mean, we all, of course, like, learn something new every day, right? So if we replace that word as ignorance, or sort of like on the way to learn something new, I mean, that's definitely a part of this. But the bigger picture here is that the regulations, how we govern all these things, like whether we're talking about tax or more sort of like in a bigger picture, what do all these companies have to comply with? And all these things are developing as we speak. And, the difficult thing, unfortunate thing is that all the regulations are not laid down yet.
Right.
And when the regulators get closer to the place where they know what they want to do, they sometimes kind of retroactively reviews some of the activities from 2-3 years ago, and say, by the way, you weren't quite, you weren't doing it like your financial institution or financial service professional, and therefore we're going to have a talk.
Yeah.
So for me, I much rather that, even if it's going to be very strict, we actually already have some kind of guideline that we can divide, and, being afraid of what I do or what I don't do might or might not come back to bite me 2 years from now.
Yeah.
So that's the kind of environment that we're operating in.
Right. Is super fluid, super kind of uncertain.
Exactly.
And while I don't think it's reasonable that the government will go the other way and say like, hey, Nick, that HNT you made, we're actually not going to tax you on it until you turn it into dollars. I don't think that's going to happen at all. It's just still so new that, there's a 2% chance that it could happen. Like it's crazy right now. Maybe
or maybe you can wait until you at least take out, and then you get taxed in the sort of that total amount at once, so that how much you can mine, that you cannot control, right? As long as you have the device there, and whatever comes into your wallet, and then there's nothing that you can do.
Yeah.
You can, however, control the timing of selling them. So if you can indeed get taxed only once for the whole value when it goes out of your sort of in a position, that would be, I think, preferred way of getting taxed by many, many people. Unfortunately, right now, and also that allows you to kind of get taxed on the sort of peak, sort of the price when you actually sell them, right? Because if you get taxed twice, yes, you can take some tax shield, but let's say you mined it when it was $100, and then you get taxed once at 100, and then actually you ended up selling at 20.
Yep.
You probably
eventually you get to claim a loss, but you can get hosed on that in the difference, because it could be 2 years before you do the two different things. So very, very uncertain times. Let's see what else. I'm seeing 2 other things on here. So proof of stake and then sustainability of mining. Do you want to jump on either of those and talk through them? Or do those trigger anything? I know we'd set these topics up a while ago, and it's like, oh, I'd forgotten what we want to dive into.
A proof of stake, that's really kind of about becoming a validator. So, maybe we are going to talk really about staking and, sort of proof of stake, maybe one time more in depth. So maybe that's where I'm going to leave it, rather than kind of start touching upon the validator business and how that works and sort of different protocols and things like that. What was the second one?
The other one is sustainability of mining. And
so we talked. We definitely talked about sustainability of mining. It is not a secret that it does take a few $1,000s in order to mine one Bitcoin, and nowadays, because the Bitcoin's value itself really kind of ran up, even if it costs a few $1,000s worth. Maybe some people are it's okay. As long as there's a split between split between how much I have to spend in order to mine this, and where I'm actually going to get the Bitcoin, where I'm going to actually end up selling that Bitcoin, it's all right. But if we actually think about why this blockchain technology started to begin with, it's to bring the financial service to the people's hands. And now, the Helium is a little different, right? Because the device is a few $100s, and then you mine these Helium coins. So anybody technically can afford it.
Yep.
But the Bitcoin, it's become, people have to spend millions of dollars to buy a few hundred machines in order to do that very complicated math formula.
Yep.
Because not everybody can get it. Only the person who gets it right first gets that. And then you have to repeat it again and again before you actually become the first person. So think about all the machines that you're going to have to buy. Far more expensive machines
it's way
than
less
a Helium device. And your likelihood of actually becoming the first one from time to time to solve that the puzzle.
Yeah.
I mean, and then
it's
on
a bigger
top of
risk.
that,
It's a lot more expense.
Exactly. Yeah. So, I mean, I like to get the blockchain to be where it truly is sustainable. It is sustainable because, right? I mean, we are taking a lot of like middlemen out, and we are bringing financial service a little bit more into the hands of people rather than sort of very rich few people.
Yep.
But in order for this to become more sustainable, I mean, there are a lot more improvements that we can make. And for that, having this proof of, different types of proof of XYZ to bring it a little bit cheaper, a little bit more affordable, a little bit easier for people to kind of grasp and run with it. Yep. It's a very welcome change. We still have a long way to go, though.
For sure. Okay, well, coming up at the end of the hour, I've seen a couple people in our chat. So this is but I'm not sure if they can access it or not because we just haven't used this that much. I know I tested this a while ago with some of the Gristle Crüe. So if any of you guys have questions, you can drop them in the chat if you want to, or drop them in Crew Talk, and I'll keep an eye on that as well. But I see there's a couple people kind of watching what we're doing.
Oh, nice. So you're messaging that through, Nick.
Yes. Maybe we'll see what happens. I mean, it's one of the things that I wanted to make as a benefit for the Gristle Crüe for the membership side is that they get to see these as they're happening. If they've got a question for you that's a financial literacy question, is jump on and ask it.
Absolutely.
So we'll see if that comes through. What is while we're waiting for them to figure that out or yell at me for not figuring out myself, what's next for you, right? You've just you're kind of embarking on a new piece, right?
Yeah, that's correct. So I mean, I always had HUTConsulting, under which I am advising a number of different companies, and I probably, first of all, let me enjoy the summer a little bit, and then the warm season finally has arrived in New York.
Yeah.
So I want to be able to enjoy that a little bit, and also on the a little bit more serious note, Corona. The travel finally has become a little bit easier. So I want to go see my parents in my home country.
Okay.
Taking this opportunity. So that's like sort of in my immediate next. But in terms of sort of professionally, I definitely want to be a part of another project.
Yep.
But between now and then, like I said, I'm already advising a number of different projects, and also under my consulting, umbrella, I'm going to be advising a few different I'm going to be working on a couple of probably small projects. So that will be next before I'm going to decide what kind of project I want to be a part of, where I think, I can be the most value also.
Yeah. What does the advice look like? Like, why would a project come and find you, and what kind of advice would you give them?
So if it's a sort of like a crypto operating company, that's the most straightforward one, where they wanna have somebody who's been there, done that, DeFi, crypto investment, trading, etc., etc. They're unlike putting money into FX or a bond or equity, which has a long history already, and then a lot of people can share the wealth of knowledge with each other so that we don't necessarily make mistakes, and we can share the research, etc. Right? I mean, I can definitely tell you that there are a lot of pitfalls that you can fall into, and probably I fell into every single one of them on the way.
Sure, yeah, right. Climbing out is how you learn. Yeah,
exactly. So that sharing that kind of experience and see what's next. I mean, it's definitely something that some of these projects are looking to, and then also as part of us just kind of operating in a simple blockchain crypto, we are becoming more sort of Web3 oriented more sort of we are levering the blockchain
Yeah.
a lot more than, I mean, just like anything else, right? Technology continues developing. So from that point of view, also, there's always a foundation, which is that like, what are we going to do with all these tokens and whatnot? And then there's like a build up. So and a lot of different people look for advice in sort of like from a different angle. That's something that, yeah.
Yeah, I'm just trying to think of how if someone's watching this and they're starting a project, like how would they know they should come to you? Like, or what expertise would you bring where they're like, oh my God, I've got to talk to her?
Depends on, a lot of startups nowadays are started by some people who are more on the technology side than sort of pure business side, right? So, I mean, what they need to do what they should expect in terms of, getting the token going, that, or definitely all of the sort of regulatory, pitfalls or unknowns that they need to face. I mean, those are something that,
right. So that's stuff like around DAOs and NFTs and all this like tokenized ownership and all the rest of that. Is that like along those lines?
Definitely along with those lines. And that's assuming that, probably majority of the projects are being started by some people more from the engineering side than kind of business side, because that's what I see nowadays. A lot of people definitely come with more science or engineering background, and that is amazing. Like I don't code, so anybody who can build a technology platform like that is somebody that I would love to partner with on any given day to materialize all of the ideas that I have in my head.
Yeah.
But the flip side of that coin is that when you are coming from that side and you can launch the platform very quick, but as the platform launches, what you need to be cognizant of, how do you make money? What kind of business model should you put on for your project? What kind of regulatory pitfalls that you need to look after? What kind of messaging might you have to do in order to get your existence known? Yeah.
Yeah, totally. I know that I've explored that with this whole NFT thing that Gristle King is launching, this G-Unit NFT, where I don't know if I don't know what the legal terms are. I would say partnered with this group called the 𝗱𝗲𝗀𝗀. 𝗱𝗱𝗀𝗀 has this tool that allows you to make your own NFTs. I just put a blog post out on it, and you put different arms and eyes and hats and bodies and all the rest of it, and you come up with all these, what I call semi-generative art. And then as I was talking to them and saying like, oh, should we do this for holders of the G-Unit? And should we do that? Should we try this? Or they're like, dude, you're going to have to talk to a lawyer if you want to do anything beyond simple. Because if I'm understanding it right, like what is seemingly pretty rapidly happening is holders of NFTs are being treated like more like, what do they call them? Accredited investors than anything else. And there's all these implications in that most of us don't even think about, or maybe it's not holders of NFTs, like the issuers of the NFTs are treated like sophisticated, financial professionals, which I'm certainly not. And it's like, oh, if I want to allow voting for an NFT, for holding an NFT, like that opens a whole can of worms that I don't know anything about.
Precisely. And then that's why you really, nobody can get it 100% right all the time. And then that's why you always want to have multiple people's brains into one place, right? But unfortunate thing is when your project is small, when it's just starting, you cannot have 10 executives with different expertise come together. And then that's where you want to really kind of seek the outside help, where you can buy one time or sort of like for a limited amount of time service.
Yeah.
And make sure that you have the minimal requirement in place so that you're not going to be making the mistakes that you don't have to otherwise.
Right. Yeah. You're basically buying insurance in the form of knowledge.
Exactly. That you said it.
It's almost like I'm a marketing guy.
I guess you are.
Yeah, that's funny. Cool. Well, I think that wraps up kind of most of the stuff that we'd had on tap to talk about. Was there anything else that you wanted to drop in there as kind of a final piece of, I guess, financial literacy advice or topic to hit?
Yeah, no, so I think that, because of the timing of this session being held, I think probably like as this actually hits the wire, so to speak, and people watch it, it's a lot of people probably will still be watching it while this sort of residual effect is being felt. And, before you take any action, just like, take a breath and then don't be 100% emotional and reactional. That's that often doesn't allow any one of us make the right decision for our money. And whether or not we like it, without money we can't make our living. So how to treat your own portfolio, at the end of the day, it requires almost you to detach yourself a little bit and say, is this the right thing to do? Just take one breath and take your dog to walk like you do, Nick, and just give yourself one brief moment before you do a very reactional kind of decision making.
Love it. Oh, that's fantastic. That's a great place to wrap it up on. Cool. So that should do it. Thank you, Harumi, for coming on. That was super, super cool to share that. As you and I kind of talk more about financial literacy stuff or anything else comes up that you want to hit, let's hit that again.
Absolutely.
For folks watching this who want to get the inside track, we didn't have anyone that I can see jump up and ask questions, but this is a feature for Gristle Crüe members. So if you're on the inside, you get to, next time I have Harumi on, you get to kind of talk to her directly and ask questions. So that's a pretty cool thing. So cruise on over to the Gristle King site and gristleking.com. Check that out. So, and Harumi, should I point people to, do you have a website you want them to go to? Or you're like, yes. No, I'm going on vacation.
No. I mean, the website is there. So it's called, it is called HUTConsulting.com.
Okay. HUTConsulting.com. Yeah. One word, HUTConsulting. Okay, cool. I'll drop that in the description.
Oh, great.
On the tubes, and we'll get that out there. Ripping. Thanks so much for coming on.
Thank you so much, guys.